Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So now I'm continuing the problems on incomplete records. Last video I have completed 5 main problems on incomplete records. So in this video I'm going to complete 6th and 7th main problem. So you have seen in the last video I have explained the meaning of the term incomplete records. When a business maintains incomplete records, how the profit will be ascertained? By comparison method and by conversion method, all these things I have explained in the first theory video. So without understanding the first and second video, you should not join now. It will be difficult for you. So if you want the complete command on the topic of incomplete records, I suggest you to watch from beginning. So if you have not watched the earlier videos, I suggest you to watch the first video on this incomplete records, on theory as well as short questions. Then you come to this video. So before starting the next problem, I expect my viewers to have a printout of the problems which are given in the link under my description. So before watching any problem, you must always have a hard copy of the problems. Take a screenshot of the solution of 6th and 7th problem, then I'll explain all the points. Come on, now I am reading out the 6th problem. Problem number 6. Sonali, a retailer, buys and sells on credit but does not keep full accounting records. Does not keep full accounting records means incomplete records. She provided the following information for the year ended 31st December 2017. So 1st January 2017 and 31st December 2017. Beginning of the year, end of the year. The bank balance is given beginning of the year 1250. But end of the year question mark. That means we have to find out what is the bank balance at the end of the year. Beginning of the year 1250 given. Now fixtures and fittings cost 50,000 and accumulated depreciation beginning of the year 5,000, end of the year 10,000. Inventory opening closing given. Other payables general expenses opening and closing given. Trade payables opening closing given. Trade receivables opening 42,500 but closing question mark. We have to find out what is the closing trade receivable. Now bank summary. Debit side, trade receivable 1,42,000. That means cash received from receivables or customers. Cash received from customers 1,42,000 and payments trade payable 92,750. Payment made to suppliers or payment made to payables 92,750. Drawings, cash withdrawn by the owner for personal use 18,700. General expenses paid 34,500. These are the payments. Now additional information, irrecoverable debt 3,050 were written off. So during the year, irrecoverable debt written off. Already in the last previous videos I have explained you irrecoverable debt. The entry for irrecoverable debt is irrecoverable debt debit, trade receivable credit. The trade receivable account will be credited irrecoverable debt. Now during the year sales were 1,45,000 and purchases were 89,450. Return outward means purchase return. The purchase return was 1750. Profit for the year to revenue percentage was 15%. The profit is also given. The profit is 15% of revenue. What is the revenue? It is given somewhere here. Revenue, I'll show it. Sales. It is given. Sales were 1,45,000. Sales means revenue. So revenue is 1,45,000. So 15% of 1,45,000 is the profit. And required, calculate the equity at 1st Jan 2017. First question. Second, prepare the trade receivable ledger control account for the year ended 31st December 2017. Balance the account on 31st December 2017 and bring down the balance to 1st January 2018. Simply, we have to make a trade receivables ledger control account. C point. Prepare the statement of financial position on 31st December 2017. And D point. State clearly the concept applied for creating the provision for irrecoverable debt and explain how the statement of financial position is affected by the provision for irrecoverable debt. So A, B, C, D, 4 questions are there. One by one we'll attempt. The first question, A bit. Calculate the equity on 1st January 2017. Equity means capital. The beginning of the year we have to find out the capital. And already in the last video I have explained you we can find out the capital by preparing statement of affairs. By making statement of affairs, we can find out the capital. So here I am making Sonali, the sole trader. Calculation of equity on 1st Jan. This is a statement of affairs. Statement of affairs is a document listing down all the assets and liabilities on a particular date. So when we are making this on 1st January 2017, assets. You can see in the problem, 1st January 2017, all assets are given. Bank balance 1,250. So bank balance 1,250. Fixtures and fitting cost is 50,000 and accumulated depreciation 5,000. So deduct 5,000. 50,000 is the cost, accumulated depreciation 5,000. 45,000 is the net value, carrying value. Then inventory. Inventory is the asset. Beginning of the year 27,500. Then other payables. Payable means liability. So other payables 1,350. Then trade payables. This is also a liability. Two payables are there. Other payable and trade payable. Both are liabilities. So other payable, trade payable. Then we have trade receivable asset. So asset side, trade receivable. That's all. Whatever the values are given at the beginning of the year, 1st January 2017, all the values I have taken. The only thing you have to remember is which are the assets and which are the liabilities. So I have taken all the assets. Bank, fixture and fitting, inventory, trade receivable. The total of the asset is 1,16,250. 1,16,250 is the assets total. From this we deduct the liabilities total. We'll get the capital. Capital is equal to assets minus liabilities. Assets are 116,250. Liabilities are other payable 1350, trade payable 37,450. So from 116,250 deduct minus 1,350 minus 37,450. The balancing figure you will get 77,450. This is the equity or capital. First A bit completed. It is asking you what is the capital or equity on 1st January, beginning of the year. So we got 1st January, capital was 77,450. A bit completed. Now B bit, it is asking you to make the trade receivables account. Opening trade receivable is given 42,500, but closing trade receivable is not given. So we have to find out the closing trade receivable. Trade receivables ledger control account. First of all, opening balance, will take it on the debit side. In the last 5 problems I have explained you. Trade receivable account, debit side. Balance brought down 42,500. This is the opening balance. Opening balance. Then we are given the sales. The total sales were 1,45,000. Total sales are 1,45,000. So entry will be receivables account debtor, receivables account debit, sales account credit. The entry for sales is trade receivables account debit, sales account credit. So trade receivable account debit side, sales day book 1,45,000 given in the problem. Given in the problem. Sales over. Now cash received. How much is the cash received from receivables? Trade receivable 1,42,000. 1,42,000 cash received from trade receivable. Entry will be bank account debit, trade receivable credit. So trade receivable credit side, cash book bank 1,42,000. Next comes irrecoverable debt. It is given in the problem, irrecoverable debt 3,050 were written off. The entry for irrecoverable debt, last chapter we have discussed. Irrecoverable debt debit, trade receivable credit. You should not write down. Whenever I explain something, always you keep a notebook and write it down important points. Irrecoverable debit, trade receivable credit. So credit side, irrecoverable debt, journal. Actually this irrecoverable entry will be passed in journal. So I am writing here journal irrecoverable debt 3,050. That's all. Now simply we find the balancing figure. That is the closing balance of trade receivable. So debit side 42,500 plus 1,45,000, total 187,500. From 187,500 minus 1,42,000 minus 3,050. Deduct these two items. The balancing figure is 42,450, balance carried down. This is the closing balance of trade receivable, which is not given in the problem. We have calculated. The only thing you have to remember, which item will come on debit side, which item will come on credit side. Debit side, opening balance, first item. Sales will be taken on debit side. Cash received will be taken on the credit side. Irrecoverable debt will be taken on the credit side. Now take the total on the debit side minus these two items, you will get 42,450 closing balance. So carried down, brought down. That's all. Second, B bit completed. Now C bit, it is asking you to make statement of financial position. This is the statement of financial position on 31st December 2017, end of the year. Format. The format you have to remember. Statement of financial position will have two parts. The first part is asset and the second part is equity and liabilities. So half of the statement is up to here, up to assets. Then remaining half is equity and liabilities. The total of assets and equity and liabilities should be equal, always same. If you do not commit any mistake, the total of assets and total of liability will be equal. Now see here, assets, non-current assets. Non-current assets are fixtures and fittings. So end of the year you can see, we are making this at the end of the year. So 31st December cost of fixtures is 50,000, accumulated depreciation 10,000, end of the year. So 50,000 minus 10,000, 40,000 is the carrying value. This is non-current. Current assets consist of two items, inventory, trade receivable. Inventory and trade receivable. So inventory is given as 33,950 and trade receivable is given as, trade receivable we have calculated 42,450. So 42,450 is the trade receivable at the end of the year. Inventory end of the year given in the problem 33,950. Take the total 76,400. The total of the assets 1,16,400. Half of the statement over. Remaining half equity and liabilities. Under equity and liability, first we take equity. Equity at the beginning of the year. Already we have calculated this is the beginning, 1st January. How much equity we got? 77,450. 77,450 is the equity. The beginning of the year 77. To this we add the profit. It is given profit is 15% of revenue. Revenue means sales. The sales are given in the problem as how much? 1,45,000. So 15% of 1,45,000, 21,750 is the profit for the year. Add up 77,450 plus 21,750, 99,200. From this we deduct drawings. It is given in the drawings are 18,700. It is given here in the bank summary. 18,700 deduct. The outer column 80,500. This is the equity. This 80,500 is the equity. Now we have to take the liabilities. Current liabilities are trade payable. It is given in the problem. Trade payable are 32,400. 32,400 are taken. Other payables are also given in the problem. End of the year 800. So 800 other payable. Now bank overdraft is not given anywhere. We have calculated. Because opening bank balance is given. Opening bank balance is given 1,250. Closing bank balance is not given. We have to find out the closing bank balance. So how to find out? Here I am showing. Closing bank overdraft. Actually, if payments are more than receipts, you'll get overdraft. Payments are more than receipts, we'll get overdraft. Now we'll see opening balance. How much is the opening balance of bank? 1,250. So opening balance 1,250 plus total receipts. How much cash is received from the customers? We have received 1,42,000. Here we have written bank. So 1,42,000 rupees have been received from the customers. So opening balance plus total receipts. So 1,250 plus 1,42,000 minus total payments. Payments are given in the problem. Trade receivable 92,750, drawing 18,700 and general expenses 34,500. These are the payments. So we deduct payments minus all payments. 92,750, 18,700, 34,500. ये तीनों को ऐड करके माइनस कर दें. तो 1,250 plus 1,42,000 minus all these you add up and then deduct. You will get 2,700 minus figure. You will get in minus figure. Instead of writing 2,700, I will write out like this. 2,700 negative minus. The bank balance is coming in negative terms. That's why I am writing overdraft. And overdraft will be taken under liabilities. If you get positive value, plus value, you will take here bank balance. So if the closing balance is positive, current assets. If the closing bank balance is negative, bank overdraft. So bank overdraft 2,700. So total of these three 35,900. If you take the total 80,500 plus 35,900, 1,16,400. So here assets 1,16,400, liability also 1,16,400. Your statement is tallied. That's it. This is the end of problem number 6. Now I am coming to the problem number 7. See carefully. Rachel Black, a sole trader, does not keep proper accounting records but was able to provide the following information for the year ended 31st December 2014. So he is not keeping proper complete set. He is having incomplete records. But information given: inventory, opening inventory 1,200, closing inventory 1,400. Trade receivable opening 4,500, closing 8,700. Trade payable opening 3,678, closing 4,321. Opening, closing both given. Then an analysis of a cash book revealed that during the year ended 31st December 2018, Rachel had received payments of 97,800 from her customers and paid 36,890 to her suppliers. That means the sole trader has supplied the information that how much cash is received from customers and how much cash is paid to the suppliers. The supplier had allowed her cash discount of 1,667. Discount allowed by the supplier. So we have received the discount. So this 1,667 is the discount received. All purchases and sales are on credit. Calculate the sales for the year, calculate the purchase for the year, prepare the income statement for the year ended only to find out the gross profit. So 3 questions are asked. First question, calculate the total sales. Second question, calculate the total purchases. And thirdly, prepare an income statement to find out only gross profit. That's it. Now, one by one we'll start. Rachel Black, trade receivables ledger control account. We can make this trade receivable control ledger control account to find out the sales, and trade payable ledger control account to find out the purchases. So how we to calculate sales? Already I told you, every time I am saying the same thing. Receivables account debit side will take the opening balance. It is given trade receivable opening balance is 4,500. This is the opening balance. And closing balance trade receivable is also given. Trade receivable closing balance 8,700. So ये 8,700 closing balance. First of all, opening balance, closing balance, right? Opening balance debit side, closing balance credit side. Next comes cash received from customers. When cash is received, bank account debit, trade receivables credit. So trade receivable credit side, cash book, bank balance 97,800. It is given in the problem. 97,800 cash received. So here I have taken cash received. That's all. Now easily we can find out the sales. Take the total on the credit side. A 97,800 plus 8,700. 1,06,500 is the total on the credit side. From this total, deduct 4,500. The balancing figure you will get 1,02,000. And this 1,02,000 is the sales day book or credit sales. That's all. First question completed. It is asking you to calculate credit sale. We got it. Alternative presentation. If you are not comfortable with making this trade receivable ledger control account, if you are feeling it confusing, then better you remember the equation. Easily you can find out. Even in the short questions also I explain you this equation. In examination, you can prepare this trade receivable account or you can make this equation to find out the sales. Not compulsory that you have to make this account. If you are not comfortable with account, remember the equation. So what is that equation? Credit sale is equal to cash received plus closing receivable minus opening receivable. Already this equation I have discussed in short questions. How to find out credit sales? Credit sales is equal to cash received from customers plus closing receivables minus opening receivables. So here cash received is 97,800. Closing receivable is 8,700. Opening receivable are 4,500. So 97,800 plus 8,700 minus 4,500, 1,02,000. Same thing I got. Same 1,02,000 credit sale I got by making this account or by making this equation. So it's your choice. You can do like this or you can do like this. That's all. A bit complete. Now B bit. Now I'm making trade payables account to find out the purchases. Same way how we have prepared trade receivable. Opening balance will be taken on the credit side. Opposite. Trade receivable debit side opening balance. Trade payable opening balance will be credit side. So balance brought down 3,678 credit side. This is the opening balance. Closing balance on debit side. The closing balance of payable is given 4,321. So 4,321 is the closing balance debit side. Opening balance, closing balance. Now cash paid to payables. Cash paid to suppliers. It is given in the problem. How much? $36,890. 36,890 is the cash paid to payables. So here 36,890 cash book bank. Entry will be payables account debit, bank account credit. Next, discount allowed by the supplier. When supplier allowed discount, we have received. So discount received should be credited and payables should be debited. Write the entry. Discount received entry. Trade payables debit and discount received credit. Trade payable debit, discount received credit. So trade payable should be debited. So debit side, discount received 4,667. That's all. This is the complete information. Now we find out the balancing figure. Take the total on the debit side. Debit side 3 items total 4,28,878. 42,878 is the total on the debit side. From 42,878 deduct 3,678 minus 3,678. The balancing figure you are getting 39,200. This 39,200 is the purchases, credit purchases. That's what it is asking you to calculate credit sales, to calculate credit purchase. Here we have calculated credit sales and there we have calculated credit purchases. Now alternative presentation. If you are not comfortable with making this ledger account, you can apply the equation. You can apply the equation to find out what is the equation. Credit purchase is equal to cash paid. Cash paid plus discount received. Remember, cash paid plus discount received plus closing payables minus opening payables. Just like this. Here cash received was there. There it is cash paid. Cash paid to supplier. So cash paid to supplier plus discount received plus closing payables minus opening payables. And all the information is given in the problem. Cash paid is 36,890, discount received is 1,667, closing payable are 4,321, Opening payables are 3678, 39,200. Same 39,200 we got in the account and same 39,200 in the equation. So whichever is easier from your point of view, you follow that. You will get full marks. So AB completed. Now see, last point. It is asking you to make the income statement only to find out the gross profit, not the complete income statement. So first we take sales revenue. Sales revenue already we have calculated here, 1,02,000 sales. So 1,02,000 sales minus cost of sales. Cost of sales, how we can get? Opening inventory plus purchases minus closing inventory. So many problems we have applied. So opening inventory is given in the problem, 1,200, it is given. Opening inventory. To this we add purchases. Purchases are calculated here, 39,200. We have calculated 39,200. Add up. Minus closing inventory is given in the problem, 1,400. Deduct 1,400. 39,000 is the cost of sales. 39,000 cost of sales. Now 1,02,000 minus 39,000, 63,000 rupees is the gross profit. That's it. So in this video I have explained two problems, 6th and 7th. Inshallah next problem we'll do it in the next video. Keep watching all the videos so that you can be able to have a good command on this topic of incomplete records.